Good morning, everyone. We will start the morning call. US futures as well as Asian markets are up around 0.5% this morning as appetite for risk-taking returned following the deal between President Joe Biden and House Speaker Kevin McCarthy on the US debt ceiling. Agreement struck between Biden and McCarthy over the weekend needs to be passed by Congress with the last date being June 5, when Treasury Secretary Janet Yellen will, like she has said that cash will run out by then. So by then the deal has to be closed. So most likely it will be closed by then. So in the short term, global markets are expected to remain buoyant. We have started the week on a positive note, and probably next few days should be positive as well. Brent crude futures climbed 0.5% also because of this news, currently at $70. I will now invite the technical team to take the call forward.
Yes, thank you, Jihan. Good morning, all of you. As Jihan has rightly pointed out, due to the global positive news, we are likely to open with a gap up opening almost by 140 to 170 points. In between that, we are getting on gap up opening. For the Nifty today intraday levels, the upside, the resistance is placed at 18,740. If it surpasses that level, then 18,800 is likely to be seen above that level, 90,000 levels. Then it means that the Nifty is likely to retest its all-time high on the higher sides. As soon as the gap up openings starts, we likely to witness some sort of a profit bookings at the higher level. So one should take their profits if the Nifty goes beyond the 18,800 levels. Now coming towards the Bank Nifty for today intraday purpose, the first resistance is placed at 44,300. Any more above that level, the positive rally is likely to be extended towards 44,500 to 44,600. Whereas on a downside, as of now, the support is strongly placed at 43,800. Below that level, we can witness some sort of a profit booking, which might take a Bank Nifty towards 43,550 levels, 43,400. Now coming towards the Nifty Finance, 19,000 will be the first resistance level. Above that level, 19,120, 19,200 levels can be seen. Whereas on lower side, 18,660, 18,570 are the crucial support levels we need to keep eye on it. Now coming towards the stock specific, Upper Hospital really looks good on the technical front. We have witnessed a buy call in this particular stock as well. Well placed about 20 DMA. We are looking for a target of 4690, 4700 levels on the higher side. So those who are having any long positions, they can hold on or can initiate if it's the stock is opening at the current level itself, 4600. Stop loss can be kept at 4545, that is 4545 levels. Upside, we are looking for a target of 4695, 4700 level. That's it from my side. I request Ami to take a call.
Yeah, thank you. Good morning, everyone. So on the derivatives front, as from last 2 weeks, we are continuously recommending that the Nifty strength looks to be positive because all the data points were not giving a breakdown on the lower end because as per the OI positions were continuously getting added up near ATM strikes. While in yesterday's session, means on Friday session also, we recommended that Nifty has given a major breakout in the monthly session, and we expect the market to reach on the upside towards 18,800 to 19,000 mark. The reason behind this was we were seeing that on for the May series, the positions which were getting converted for the June series on the rollover basis, we are seeing that the overall future positions, future OI positions was below the average of around the average Nifty future OI positions remains to be 1.25 to 1.30 crore. But on the May series, we were seeing that the closing came near 0.85 lakhs. So that was below the average. So there was a clear indication that market is likely to give a buy side momentum in coming trading session, and in today's session we are seeing that Nifty is likely to open almost around 150 to 180 points on the higher end. So more 100 to 150 points of movement we can expect in next 1 to 2 trading session. Once Nifty comes in the range of 18,800 to 19,000 range, at that point of time we might see some again the range bound momentum or consolidation phase, and the profit booking need to be done in that range, because we have seen that a sharp rally has been witnessed from the index specific front, almost 700 to 800 points movement we have seen from past 2 weeks. So there might get a break around 18,800 level. So hold a long position with the support of 18,500 level, and the profit booking can be seen at 18,800 level. As per the stock specific, we expect a IT counter looks positive. Selective counter from the IT would be TCS and HCL Tech looks positive, while other counter like Bajaj Finserv and Lupin, these two counter also looks positive for new trading recommendations. So that's it from the derivative front. Thank you.
On the result side, uh, one of the results which was good was Power Finance Corporation. Result was above expectation because of provision write back as well as acceleration in loan book growth to double digits. After many quarters, we saw that loan book increased 13% year on year and 7% sequentially. Disbursement was also very strong at 38,000 crore for the quarter against last year just 16,000 crores. Asset quality was stable. In last many years, we have seen that loan growth momentum in PFC has a very high correlation with the stock price. ROE over the years has been at around 18-20% level. So that is not the criteria that moves the stock. It is more about the loan growth. So expect a good performance from Power Finance Corporation. On the other hand, REC's performance was below expectation, and on all the growth parameters, it has lagged. So one can ignore REC. Sundaram Finance, the CV financer result has improved because of improvement in asset quality. Loan growth here was 17% year on year at a 4-year high. Similarly, net NPA was also low at a 4-year low at just 0.9% from December quarter 1.4%. So good improvement over there as well. So it's positive for Sundaram Finance. City Union Bank, over the last many years, this has been pegged as the quality mid-cap bank. But since last couple of years post-COVID, we have seen the performance has deteriorated consistently, and it has not been able to recover in line with other mid-cap banks. Result was below expectation because loan growth was at just 2% sequentially and 7% year on year. And management has guided that even the first half of current year will be tepid. So also net interest margin declined from 3.9% to 3.65% for the quarter. So don't expect any improvement here in the short term. In fact, if one is holding, one can switch to better stocks in the banking sector. In the monthly, we just came out with Equitas Small Finance Bank. So if some of your clients are holding City Union Bank, you can make them switch to Equitas Small Finance Bank. Thank you.
Good morning. Hinduja Global Solution has posted decline set of numbers, especially on the QOQ front. Revenue declined by 4.4% QOQ and came at 1069.8 crores. Even EBITDA margin stepped to 3.4% versus QOQ of 7.4%. Stock is trading at a P of 17.1 times TTM EPS. Thank you.
Yeah, good morning. Sarda Energy reported improving set of numbers on account of higher volumes and operational efficiencies. Revenue came in at 1,076 crores versus 908 crores sequentially. EBITDA came in at 214 crores versus 196 crores quarter on quarter. Apart from this, JK Cement result was marginally above expectations. Revenue came in at 2,384 crores versus expectation of 2,471 crores. EBITDA came in at 362 crores versus expectation of 351 crores. Margins have also improved to 15% as compared to 11.5% last quarter. The stock is trading at EV by EBITDA of 12 times FY24 earnings. Maharashtra Seamless result has improved mainly due to higher volumes. Total sales volume came in at 145,000 ton versus 118,000 ton last quarter. Revenue came in at 1633 crores versus 1339 crores sequentially. EBITDA per ton for seamless pipes stood at 21,950 versus 20,290 last quarter. The stock is trading at PE of 6.8 times TTM earnings. Mangalam Cement reported improving set of numbers. Revenue came in at 459 crores versus 429 crores last quarter. EBITDA came in at 45 crores versus 21 crores sequentially. Margins have improved from 5% last quarter to 9.8% this quarter. The stock is trading at EV by EBITDA of 8.5 times TTM earnings. Thank you.
Good morning. Samvardhana Motherson International announced its result. The result is ahead of expectation. Revenue came in at 22,477 crores versus an expectation of 20,989 crores, which grew by 11% sequentially and 31% on a YOY basis. EBITDA margin came in at 9% versus an expectation of 8.1%. The company booked a robust business of nearly $70 billion for FY23. Overall, as of March 31st, 2023, Motherson booked a strong business of nearly 5.7 lakh crores from the automotive business. The company continued deleveraging with the net debt to EBITDA ratio improving to 1.4 times from 1.8 times sequentially. The net debt stood at 7,474 crores by end of Q4 FY23, lower by almost around 1,000 crores sequentially. The company witnessed 7 strategic acquisitions since April 2022 with a combined pro forma revenue of over $4.9 billion on a gross basis and $1.1 billion on a net basis. The stock is trading at a PE of 19.8 times FY24 EPS. Balkrishna Industries announced its result. The result was marginally below expectation. Revenue came in at 2,317 crores as against an expectation of 2,323 crores, which grew by 7% sequentially but saw a degrowth of 2.4% on a YOY basis. EBITDA margin came in at 20.7%, which was marginally below expectation of 22.1%. Generally, Q4 is the best performing quarter. However, end markets, especially channel inventory situation, is not completely out of the woods. The company believes the channel inventory-led issues may be resolved by June or July of FY24. The company remains positive for the year FY24 on margins. Multiple levels such as favorable raw material costs, better hedge rate, complete normalization of logistics costs, etc., will aid the improvement in margin profile. In terms of end markets, the company expects Europe to normalize later during the year, while America and Indian market will continue its FY23 performance trajectory. The stock is trading at a PE of 30.8 times FY24 EPS. Mahindra and Mahindra announced its result. The result was in line with expectation. Revenue came in at 22,571 crores versus an expectation of 21,884 crores, which grew by 4% sequentially and 32% on a YOY basis. EBITDA margin came in at 12.4% versus an expectation of 12.7%. The management indicated that open bookings as on May 23 stood at more than 292,000 units. M&M is planning to launch a new range of 25 to 29 HP lightweight tractors and all new Bolero Max pickup range. It has received good traction for its recently launched electric variant of XUV 400 with order bookings of more than 20,000 units. Moreover, in order to meet the growing demand and reduce long waiting periods, M&M is expanding its UV capacity by 49,000 units by FY24 end. M&M reported highest ever volume of 14.7K units in electric three-wheeler with market share at 67% as on Q4 FY23. In the farm equipment segment, market share stood at 40.7%, which saw a 120 basis point increase YOY. The SUV segment lost revenue market share by 100 basis points in the fourth quarter after having a good run from the first quarter to the third quarter of FY23. In tractors, current market share stands at 40.7%. The management sees huge potential to increase market share in the near term on the back of new product launches and rapid network expansion. The stock is trading at a PE of 19.8 times FY24 EPS. Thank you.
Yeah, commodities team can take over.
Yeah, thank you, Jian. Good morning, everyone. So first of all, today LME and US market are closed. So a moment could be some. There should be some dry moment. Initially, one can initiate a buy in gold around 59,250 and maintain a stop loss of 59,000. Pullback till 59 500 to 600 is likely, and one should take profit around those levels. Silver also one can initiate a buy around 71,000 and maintain a stop loss of 70500. On upside, 72,000 is the level we are looking for. In crude oil, prices are trading in a range from 6,100 to 5,900. Trading is recommended in this zone, and in natural gas, we expect some upside momentum till 208, 2010 levels. So buying on dip is recommended and maintain a stop loss of 192. In copper, we might see prices testing 717, 18, whereby again profit taking is expected. So buy around 710 levels and maintain a stop loss of 705. Zinc also we expect prices to test 214 to 15. So buying is recommended around 211 and keep a stop loss of 208. That's it from me. I'll ask Utkarsh to take over from here.
Yeah, thank you, sir. Very good morning, all of you. In Louisiana, we already initiated our short positions. So one can initiate short positions also in the June contract if we get any pullback around 82.67 levels to 82.72 levels with a strict stop loss of 82.81 for the target of 82.50 and 82.40 levels. In JBP INR, one can initiate a long position if price is going to sustain above 102.21 levels. With a strict stop loss of 101.97 for the target of 102.58 and 102.75 levels. In Euro INR, one can initiate a long position if price is going to sustain above 89.05 levels with a strict stop loss of 88.70 for the target of 89.35 and 89.52 levels. Thank you.